Most people think wealth is something you build, then cash out. Work hard, invest, sell at the right time, and finally enjoy life. That is the story almost everyone is taught. It sounds logical, even responsible. But if you look closely at the people who sit at the very top of global wealth, that story completely falls apart. Billionaires almost never behave like that. They do not build assets just to sell them. They do not treat ownership as a temporary phase. And even when the value of an asset reaches numbers that would change the life of generations, they still hesitate to sell. From the outside, it looks irrational. Why not take the money and enjoy it? Why not lock in profit and reduce risk? But billionaire thinking is built on a completely different logic system. They are not chasing money in the way most people imagine. They are chasing control, continuity, and compounding systems that never stop working. To understand this, you have to forget the idea that wealth is about how much cash you have. At that level, cash is almost secondary. What matters is what produces cash repeatedly without restarting effort, and that is exactly what assets represent in their world. A billionaire does not see an asset as something to own and sell. They see it as a living engine, an engine that produces output every year, every cycle, every decade. Selling that engine is not viewed as winning. It is often viewed as stopping a process that is still accelerating. And this is where the real mindset shift begins. Because while most people are trying to reach a point where they can finally cash out, billionaires are trying to build things that they never need to cash out from in the first place. So the question is not just, why don't they sell? The deeper question is, what do they understand about assets that most people completely miss? The answer is not one reason. It is a combination of financial structure, time horizon, tax strategy, psychological discipline, and a completely different understanding of what wealth actually is. And once you see it clearly, the idea of selling assets too early starts to look less like a smart decision and more like a shortcut that destroys long-term power. Assets are not wealth to billionaires. They are wealth machines. To understand why billionaires rarely sell, you first have to understand how they define an asset. Most people think an asset is something valuable that can be converted into money. A house, a business, shares in a company, land, or investments. Something you can sell when you need liquidity. But in billionaire thinking, that definition is incomplete. An asset is not valuable because it can be sold. It is valuable because it generates ongoing value without being sold. That is the key difference. A salary is linear. You work, you get paid, and the moment you stop working, the money stops. But assets are exponential. They can continue generating income even when the owner is not actively involved. A business can produce profit. Real estate can generate rent. Equity can grow in value while also paying dividends. Intellectual property can generate royalties for decades. So from a billionaire perspective, selling an asset is not simply exchanging something valuable for cash. It is shutting down a machine that produces value over time. And that is where the hesitation comes from. Imagine you own a machine that produces 10 million per year. Someone offers you 100 million to buy it. On paper, that looks like a great deal. But if that machine could continue producing for decades, the real value might be far higher than the offer. Selling it would mean giving up all future production for a one-time payout. This is how billionaires think. They are not comparing current price to current value. They are comparing current price to future lifetime output. That is why they often hold companies for decades instead of selling them after success. It is not emotional attachment. It is mathematical continuation. Even when assets fluctuate in value, they are often seen as part of a larger system. A company may drop in valuation during a downturn, but if the long-term system is strong, selling would interrupt future recovery and growth. Billionaires understand that volatility is not failure. It is part of the growth cycle. So instead of reacting to short-term price movements, they focus on long-term production capacity. And once you see assets as machines that print money over time, the idea of selling them too early becomes far less attractive. Because selling is not just gaining money. It is stopping future money from being created. Selling is often replaced with borrowing, structuring, and tax strategy. Another major reason billionaires rarely sell assets is because selling is not just a financial decision, it is a structural one. And structure determines how much wealth you actually keep. When most people sell an asset, they think about profit. They focus on the difference between buying price and selling price. But billionaires are trained to think beyond profit. They think about after-tax value, opportunity cost, and financial positioning. Because in many cases, selling triggers one of the biggest silent costs in wealth: taxation. A massive gain on an asset can look impressive until a large portion is reduced through taxes, fees, and reinvestment friction. That immediate reduction changes the real outcome significantly. So instead of selling, wealthy individuals often use a different approach. They borrow against their assets. This creates a powerful financial structure where ownership is maintained while liquidity is still accessed. In simple terms, the asset stays intact, continues to grow, and still acts as collateral for loans. The borrowed money can be used for investments, lifestyle, or new ventures without triggering a taxable sale. This is one of the most important but least understood principles of high-level wealth management. From the outside, it looks like billionaires are not using their wealth. But in reality, they are using it in a more efficient way. Instead of breaking ownership, they leverage ownership. This creates a loop where assets continue compounding while still supporting financial flexibility. Selling breaks that loop. Borrowing preserves it. There is also another layer: timing. Billionaires are extremely sensitive to timing because they understand that selling at the wrong moment can permanently reduce long-term wealth potential. Markets move in cycles, industries evolve, and innovation reshapes value constantly. A poorly timed exit can mean losing decades of future growth. So rather than trying to time the top, they often choose to stay invested and let compounding continue working in their favor. This requires patience that most people struggle with because it goes against emotional instincts. Humans naturally want certainty. Selling feels like certainty. It feels like control. It feels like safety. But billionaire strategy prioritizes asymmetry over certainty. They prefer systems where upside remains open, even if uncertainty exists. And assets that are not sold retain that asymmetry. Once sold, the upside disappears completely. That is why holding often feels safer to them than exiting, even when the numbers look tempting. Ownership equals influence, and selling reduces power. At higher levels of wealth, assets are not just financial instruments. They are sources of influence. Ownership of a company does not only generate income, it also creates control over decisions, direction, innovation, hiring, expansion, and market positioning. Ownership of real estate can influence entire neighborhoods or cities. Ownership of media can influence public perception. Ownership of infrastructure can influence entire economies. This is why billionaires rarely think of assets as isolated possessions. They think of them as positions of influence in different systems. Selling an asset does not just remove income, it removes influence over that system. And influence, once lost, is difficult to regain. This is one of the most important psychological differences between billionaires and everyone else. While most people evaluate assets based on return, billionaires evaluate them based on control. Control creates leverage. Leverage creates opportunity. Opportunity creates expansion. So ownership is not passive, it is active positioning. When you own something valuable, you are not just receiving money from it, you are also shaping its future direction. And that future direction can lead to even greater wealth. Selling removes that role completely. You become an observer instead of a participant. and billionaires are almost never comfortable becoming observers of systems they once controlled. There is also reputation involved. Long-term ownership signals stability. It signals commitment. It signals trustworthiness in the business ecosystem. Investors, partners, governments, and institutions often respond more strongly to long-term holders than short-term sellers, because long-term ownership suggests belief in the future of what you built, and belief attracts more capital, more partnerships, and more opportunities. So selling too early does not just reduce assets, it can reduce perceived credibility in certain contexts. This is why many wealthy individuals structure ownership in ways that allow them to maintain control even while raising capital or expanding operations. They separate economic benefit from decision-making authority so that influence is not lost even when liquidity is adjusted. At this level, wealth is no longer just about money accumulation. It becomes about strategic positioning within systems that shape economies. And selling disrupts that positioning. Billionaire thinking is built on time, not transactions. At the deepest level, the reason billionaires rarely sell assets is because they do not think in transactions. They think in time. Most people evaluate decisions based on immediate outcomes. If something produces profit now, it is good. If it locks in gains now, it is safe. If it reduces risk now, it is smart. But billionaire thinking extends far beyond the present moment. They evaluate decisions based on what will happen 5, 10, 20, or even 50 years into the future. And in that time frame, assets behave very differently. A strong asset does not just grow, it compounds. It reinvests, expands, evolves, and becomes part of larger systems. Its value is not static, it accelerates. Selling interrupts that acceleration. It converts something dynamic into something fixed. Cash feels powerful in the short term, but cash does not compound on its own at the same rate as strong productive assets. Inflation also slowly reduces its value over time. So while cash feels like control today, assets often represent control over time itself. This is the paradox most people miss. Billionaires are not trying to maximize money in a single moment. They are trying to maximize growth across time. That is why they are willing to endure volatility, uncertainty, and long-holding periods. Because they understand that the greatest wealth is not created by timing exits perfectly, but by staying positioned long enough for compounding to fully unfold. This is also why many billionaires appear surprisingly patient in public. They are not reacting to short-term excitement or fear. They are watching long-term trajectories. And in those trajectories, selling too early is one of the most expensive mistakes possible. Because it does not just reduce wealth today, it reduces everything that wealth could have become tomorrow. So when you see billionaires holding onto assets for decades, it is not hesitation. It is strategy aligned with time itself. They are not trying to exit the game. They are trying to stay in long enough for the game to reach its full potential. And that is the final truth behind why billionaires never sell their assets. They are not just holding money. They are holding time in motion.